The stock market has taken off since Trump's election, and this might be a sugar high, and I suspect that it is. But I'm going to play this sugar high for as long as it lasts, because it might last for a couple of months at least. I'm in love with Applovin, symbol APP. Looking at the 1 week chart on Applovin, symbol APP, it's made 77% in the last week. Okay. I was somewhat hesitant to buy it because it's gone up so much, but my experience has been that I make way more money buying stocks at the top than trying to bottom fish. If you look at the year-to-date chart, it's gone up 627%. It started the year at around $47, and it's edging up pretty close to $300. You would think $350 has to be kind of the limit with this stock. And I put a trailing stop loss on this stock, especially of 4%. If it goes down 4%, I want to catch it before it goes down 40, 50 points, which is certainly very possible. So a stock like this, for me, I have to have a trailing stop loss on it to prevent the flash crashes that can occur with stocks like this. It has a high price-to-earnings ratio, a high PE of 65, which is very high. But that's compensated by its earnings growth rate is a stunning 52%. And when you have a stock rally, an uptick like we have now, and it's a strong one, and it's going to last for a while, in my opinion, the earnings growth rate is much more important than the PE. What does Applovin do? It's involved in mobile advertising. And its platform enables advertisers to target, grow, re-engage, and retain their existing mobile audience based on applications that are previously downloaded and find new customers using demographic targeting based on age, gender, relationship status, household income, and more. So Applovin is very artificial intelligence driven, and that's what I'm into nowadays. Applovin's relative strength for the year is over 83, which the question is that a sign of high demand or is that a sign that it's overbought? It's probably a little bit of both. But I'm thinking 350 has to be the top on this. But you just never know with these stocks that run wild like this. In any case, for me, it's just mandatory to have the 4% trailing stop loss on it. If it just zigs down for a little bit and then returns to going back up, I'll get back in it. But you can have a flash crash with stocks that are acting like this. A stock that's gone up nicely year to date as you look at the chart, I mean, that's going up the way you like to see a stock go up. And it's gone up 70%, which looks reasonable in comparison to Applovin. But it recently spiked at 430 and then came back down to 400. And I'm just worried about the short-term movement. And so I'm keeping it, but I put a stop loss at 395. If it goes below 395, I'll get out. I'll probably get back in if it restores its previous pattern, but it's something that should be watched, in my opinion. ANET, which is Arista Networks, has a price to earnings of about 44 and an earnings growth rate of 22%. So its price to earnings is lower, but still high. And it doesn't have quite the earnings growth rate, that 22%, as Applovin has. It's kind of being watched. I'm willing to stick with it as long as we don't take a dive. more or less, if it reestablishes its upward movement. Arista Networks' relative strength is 51, which is okay, but not great. And what does Arista Networks do, according to artificial intelligence? It designs and sells cloud networking solutions for data centers, cloud computing, and other environments. It does network switches, extensible operating systems, Cloud Vision CUE, whatever that is, Arista DAN's monitoring fabric, whatever that is, and DAN's EOS. So it's mainly artificial intelligence networking, is my understanding. The next great investment has been Reddit, symbol RDDT. And looking at the chart, it's made 175% year to date. About 20% of that was made in the last week. So it's really been doing well. It has an outrageous price to earnings ratio of 408. That is way too high. And its earnings growth rate is only 23%. But this one, you're going mainly by the momentum and going by the chart. And this is another stock where there's a big reason you keep a 4% trailing stop loss on it. Again, I've made way more money playing the tops than trying to fish the bottoms. I think it's mainly because it's relatively new social media that's going to be popular, and it's going to be a giant. It's already a major influencer. So I think this one is for the future, and it's reading the chart and loving the chart. Reddit's relative strength is 81. Is there strong demand for the stock? Yes. Is it overbought? Yes. Could it stay overbought for a long time? Yes. And then there's Nuscale Power Corporation, where we're entering a new realm of reality. Its symbol is SMR for small modular reactor. You want to read that, small modular nuclear reactor. It's your friendly neighborhood nuclear plant that's much smaller and safer, and they have better cooling methods. And artificial intelligence burns up all kind of energy. They need new energy sources, and they're looking to nuclear. And if one of the biggies grab onto this one, it'll shoot to the ceiling. So this is a story stock. It's almost all story. It has a negative price to earnings. It has a negative earnings growth rate. So this is all the future, and the future. Year to date, it's made 644% with a recent updraft, especially since October. So it's hang on and watch the chart and keep your 4% stop loss handy. So I got interested in utility companies, and specifically utility companies that provide nuclear energy. And I found Vistra Corporation, symbol VST, which is located in Texas. It's about a $48 billion market capitalization utility company. And they do nuclear energy, but they also do sun, they do wind, they do natural gas. They do all forms of energy that I can tell. And they have gone up significantly since the beginning of the year. Looking at the chart, they've gone up 268%. They're now at about $141. Their price to earnings is a more reasonable 24, and their earnings growth rate is 22%, which is good. So this would be a more reasonable buy in many ways than an SMR. It's less speculative, but SMR, I don't know, the potential is there. It's off the Richter scale. Vistra is an established company that's made 268% since the beginning of the year. So wow, and I had to buy it. It's got a reasonable price to earnings and a good earnings growth rate. And I like it that they do all forms of energy, including sun and wind and all that other stuff, in addition to nuclear. Be sure to check back. We're in an exciting phase of the stock market. A lot of it is based on the hype that Trump is going to be good for the stock market. We shall see. Things can often change once January 21st arrives. But until then, I think we're in a sweet spot. Thank you.